Welcome to the International Accounting Channel. First time joining the program, remember to subscribe to the channel, like, share with everyone. Today we share with you the lesson on fixed assets. Now, let's get started. IAS 16 is an international financial reporting standard adopted by the International Accounting Standards Board, IASB. It concerns accounting for property, plant and equipment, known more generally as fixed assets, including recognition, determination of their carrying amounts, and the depreciation charges and impairment losses to be recognized in relation to them. IAS 16 was issued in December 1993 by the International Accounting Standards Committee, the predecessor to the IASB. It was reissued in December 2003 and has been amended multiple times, most recently in the 30th of June 2014. According to IAS 16.6, property, plant and equipment are tangible items, assets held for use in the production or supply of goods or services, for rental to others or for administrative purposes, and that are expected to be used in more than one period. By definition, fixed assets are either tangible or intangible. Tangible fixed assets include a variety of items such as land, plant, machinery, etc., while intangible assets include goodwill, brand recognition, copyrights, patents, trademarks, trade names, and customer lists. Fixed assets are again divisible into appreciating and depreciating asset classes. As per the Indian accounting standards, IAS 16 deals with depreciating fixed assets, while appreciating fixed assets are classed under IAS 40, i.e. investments. The value of an asset is measured in not only the actual price paid to acquire that asset. It can include a number of other aspects as well. The book value of the asset should include 1. Purchase price. 2. Non-refundable duties or taxes. 3. Installation expenses. 4. Professional fees required for managing the asset. 5. Cost directly attributable to the asset. 6. Cost of installation, storage and dismantling. 7. Interest or borrowing cost, real or notional. In certain cases, where the purchase of an asset is through exchange, barter than an outright sale, i.e. another asset is given value of the one being purchased, the value is taken as the fair value of the asset. In case the measurable value of the assets is not measurable or it lacks commercial value, then the value is taken as the value of the asset being given up in exchange. For example, if A is exchanged for B and value of A cannot be measured by fair market standards, then the fair value market value of B is taken as the value of A. Once the value of the asset has been recognized when it enters the fixed asset register, it can be updated on a regular basis using either the actual cost minus accumulated depreciation and impairment loss system or the re-evaluation system. We needs to be done annually at least. This ensures timely detection of machinery value and loss due to pilferage, etc. In order to replace the asset in question at the end of its useful life, a provision needs to be made to purchase its replacement. This is known as depreciation, and it can also be defined as the value by which the usefulness of the asset has reduced in a given period of time, usually in a year. Depreciation methods vary and depending on the way the asset is used, these can also be changed to reflect the changed pattern. A fixed asset's life cycle includes various stages during its useful life. 1. The initial acquisition of the asset. 2. Depreciation as it is used. 3. Periodic revaluation and/or potential impairment. 4. The disposal of the asset. Fixed asset accounting. When an asset, property, plant, or equipment is purchased. Debit property, plant, or equipment account, credit cash account. Depreciation of fixed assets, debit depreciation expenses account. Credit accumulated depreciation account, revaluations and impairment. Debit impairment loss account, credit property, plant, or equipment account. Disposals of fixed assets, debit accumulated depreciation account. Credit property, plant, or equipment account. To record sales of a fixed assets. Debit cash account, credit property, plant, or equipment account. Debit accumulated depreciation account, credit gain, loss disposal account. As per IAS 16, the financial statements shall disclose for each class of asset. 1. The measurement basis used for determining the gross carrying amount. 2. The depreciation methods used. 3. The useful lives or the depreciation rates used. 4. The gross carrying amount and the accumulated depreciation, aggregated with accumulated impairment losses, at the beginning and end of the period. 5. A reconciliation of the carrying amount at the beginning and end of the period showing additions, assets classified as held for sale or included in a disposal group classified as held for sale in accordance with IFRS 5 and other disposals, acquisitions through business combinations, increases or decreases resulting from revaluations under paragraphs 31, 39, and 40 and from impairment losses recognized or reversed in other comprehensive income in accordance with IAS 36, impairment losses recognized in profit or loss in accordance with IAS 36, impairment losses reversed in profit or loss in accordance with IAS 36, depreciation, the net exchange differences arising on the translation of the financial statements from the functional currency into a different presentation currency, including the translation of a foreign operation into the presentation currency of the reporting entity, and other changes. Thank you for watching our channel. See you again in the next video.